Hi, I'm Jimmy. In this video, we're looking at Paramount Global, ticker symbol PARA. So we're going to run quickly through the basics of Paramount's business. We're actually going to run through their history because I think that's an important part to understanding some of the strengths and weaknesses of their business. Then we're going to look at some of the numbers, then we're going to try to come up with a fair value for Paramount stock to see if it's worth buying today. Now, before we jump into that, let me tell you real quick about a website that we're building where we can quickly and easily value different companies. And down the line, we'll be able to research different stocks that we're interested in right on the platform. So we've already built the discounted cash flow calculator version of the beta version of the website. And the idea is to add a ton of different valuation methods that no matter what type of company you plug in, the website will pick out what the best valuation method is for that particular company. It'll tell you, say, hey, here's the top 3 best valuation methods, and here's what the fair value is using each one, allowing us to get a more complete understanding of what we should pay for a stock. Because if we can buy great companies at good prices, over the long run, we're far more likely to perform better in our overall portfolio. Now, if you'd like to sign up to get access to this website, I will leave a link in the description below. The advantage to signing up today, when we have the beta version of the discounted cash flow calculator, is that one, we're going to keep adding different ways to value different types of companies as time goes on. We're just going to keep rolling out new features and constantly upgrading and improving the site. But also, if you sign up today in this beta version, well, you can sign up on an annual basis and we're locking in the price. If you sign up today, the price gets locked in forever. The price will never go up on you. So again, if you'd like to sign up, link in the description below. But for now, let's jump over to the history of Paramount, which really started, well, one of the early starts of it was 1994, where Viacom bought Paramount Pictures. We could see that in 94, they paid about $10 billion. Then, just 5 years later, well, Viacom put in a bid to buy CBS for about $35 billion, making them one of the largest television producing companies in the world at that time. Then we need to fast forward once again. And when we fast forward to 2006, well, at that point, apparently the marriage didn't work out. Well, Viacom and CBS split up, both trading as 2 independently publicly traded companies. Both of them, I believe, were listed on the New York Stock Exchange at the time. So the company splits at that point. Well, fast forward just a few years later, about 13 years later, brings us to 2019. The 2 companies get back together. This time, Viacom and CBS merge, cost them about $22 billion to become Viacom CBS. Well, that was just a few years ago. And when we fast forward to 2022, well, 2 interesting things happen. First, I believe it was in February of 2022, Viacom CBS changed their name to Paramount Global. This is partially around, the way they explain is that this is around to focus on the content that they have, the fact that they're going global. So they have 2 big pushes here: their global push and their direct-to-consumer push, mostly through a lot of platforms. So before we leave the company's history, I think it's important to recap the entire history. This is everything we just went through. And if you read through a lot of some of the basics of their history, this is what we get. But there's some important points here that I think point out one of the weaknesses of the company. So first, 1994, obviously they made a big deal about Viacom buying Paramount Pictures, but that was also the year that Viacom bought Blockbuster. They paid about $8.4 billion for Blockbuster. Well, just a few years later, Blockbuster gets an offer to go ahead and buy Netflix. We know, most of us know Netflix today, one of the premium streaming content services out there. Well, they get an offer to buy Netflix for $50 million. To put that in perspective, if I'm not mistaken, Netflix last year put up about $30 billion in revenue. So they get an offer to buy the whole company for $50 million. They flat out reject buying the company. Sort of the story goes that they laughed the owners, the creators of Netflix, right out of the room. Well, a couple years later, now they have their Blockbuster asset, and Viacom ended up having to spin that asset off. So in 2004, they spin off Blockbuster. And as Blockbuster's management explained, was that in order for them to spin off, they had to borrow, it was like $950 million in debt And that was one of the contributing factors to Blockbuster going out of business. So I bring this up only because one of the things that struck me about this is when we look at how much money they have spent on all these different deals. They spent $10 billion in 1994. They spent $8.4 billion to buy Blockbuster. They spent $35 billion buying CBS. They spent $22 billion in 2019 to buy CBS again. And today, my criticism, my hesitation when I was first starting the research, today this is a $12 billion company. This is a company that spent all that money, and today they're worth $12 billion. Imagine that entire history, it gets you to be worth $12 billion today. Now, that's not to say it's all a bad thing. So let's focus on today and to look at where the company is going. So we know that they have already said that they're pushing their direct-to-consumer business primarily through Paramount Plus and Pluto, but also they're going global. We'll talk a little bit about each of those. One of the strongest points for Paramount, by far the best reason to own this company, is they have a ton of high-quality content. They're one of the top content producers in the world. In fact, in recent years alone, they're about to come out with, I believe, the new Tom Cruise Mission Impossible movie. That's going to be huge. They've come out with a new Sonic movie. They had Sonic 1, Sonic 2. Both of them have put up $300-500 million a piece. And they also did the whole Top Gun Maverick thing, which I believe broke a whole ton of records worldwide, $1 billion, $4 billion, $5 something, some such number in global box office sales, which is crazy impressive. Now, all of these movies are going to end up on their streaming platforms. And they don't just have Paramount Plus, which is the most obvious one, but they also have a free streaming platform that is ad-based, and that is their Pluto platform. If you were to go sign up, I downloaded it the other day when I was doing this research to see what it looked like, and it was easy to navigate, it's simple to use. It had a whole bunch of channels, a whole bunch of content, a whole bunch of choices in it. Considering it didn't cost anything, I could see the appeal. I think that there's certainly an audience there. They also have their Showtime app. Now, there's been talk about them spinning their Showtime app into their Paramount Plus app, but for now they have both. They also have a BET platform and a Noggin platform. And I think that this speaks to Paramount's real strength. Their strength is not just the volume, the amount of content that they have, but the quality of their content tends to be very, very good. Okay, so now let's jump over to some of the numbers to see what the future looks like. So this is their revenue going back to 2004. And we could see that there was a huge jump in 2018. Well, that huge jump was because of what we just talked about with Viacom and CBS getting back together. That is when they renamed themselves Viacom CBS, up until today, where they renamed themselves again Paramount Global. But the more interesting part is when we look at analyst estimates and we look out going into the future, well, it looks like revenue is going to be expected to move higher, which is a good sign for if we're considering investing in this company. Because again, they do have a ton of high quality content. They have all this content. Now the question is, how can they convert that into revenue and ultimately profit? For that, now let's switch over to some of the per user numbers that I was able to get off of a recent presentation. Okay, so this is a chart of Paramount's revenue per active user. This is for their global Pluto TV platform. This is free, but it's ad-based. So how much money are they bringing in? And it is monthly active users. How many people are actively using it? How much revenue are they bringing in? That's how I came up with these numbers, which we can see they're in the most recent quarter at about $1.20 on a per user basis. Again, this is free for the user, but you have to watch ads. When we switch over to their Paramount Plus per subscriber numbers, this is how much people pay per user on average. Now, Paramount Plus does have two different platforms. They have a ad-supported platform. I believe in the US, it's $4.99 for the ad-supported platform, or you can buy the limited ads. I believe they only show ads with sports and things like that. And if you buy the limited ads, I believe it's $9.99 a month, or a discount if you buy it for a year. Now, this again, by the way, the global Paramount Plus includes Showtime and all of the other premium content, that they have. They push all of these together. Right now, they have about 40 million or so subscribers to the Paramount Plus. They anticipate by the end of 2024 that they will get those 40 million up to about 100 million by the end of 2024. If we assume that they're going to be somewhere near the $5 range per user, well, I think it's very possible that this company in the long run could grow their business once again because they have so much high quality content. Now, Paramount's doing a lot of different things. In fact, one of the moves that they've made recently that could be a good sign, big picture wise, but it could drag down these numbers in the not too distant future, is they recently partnered up with Walmart. Now, I think that this is a positive sign for their overall business, but basically what they did is that Walmart has, I believe the numbers were about 140 million people go into their stores every day. And whether it be at self-checkout or Walmart online, this is a screenshot from Walmart online. And as you can see down here, there is the offer for Paramount Plus. So it's the only streaming service that they're currently offering on their platform. But if you sign up for Walmart, Plus, I think you get like discounts on shipping and stuff. You can see that they say you save like $1,300 a year. I don't know where they came up with all that. But the bigger thing from our perspective for Paramount is that you get a free membership to Paramount Plus, the ad-supported version, the $4.99 version. And that's important because the way it will work is a customer goes through a self-checkout at Walmart and they say, hey, do you want to sign up for Walmart Plus? If you do, you also get Paramount Plus. That person says yes. They go home, they punch in their email address, whatever. They go home, they activate their account. They have to activate the account for Paramount to get anything out of this. Well, they activate their account. They now have access to Paramount Plus. Paramount, from that point forward, estimates are, there have been no exact numbers that have come out of it, but estimates are that they will get somewhere between $2 and $3 per user. So their $5.20 per user that they received in the most recent quarter, if the Walmart deal does well, that could drag those numbers down, at least in the near term. Because the theory here is that, at least the theory for Paramount, according to their filing documents, the documents that they've, their investor presentation documents, the theory here is that you sign up for Walmart Plus, and then at the end of the year, you're now a customer of Paramount. If you renew as a customer of Paramount Plus, well, Paramount now gives a kickback to Walmart for getting you in. That's essentially their cost of acquisition. And at that point, their average revenue per user would move higher. So in the short run, they are spending a lot of money to, one, develop new content, to push out their content globally. They're currently pushing into Walmart, but also they're pushing into the UK, they're pushing into Ireland, they're pushing into, I believe, South Korea. Italy's coming up, hitting a lot of Western Europe this year. They're hitting a lot of Eastern Europe next year. So the plan is for them to make a big global push, as well as to try to find unique ways of getting customers onto the Paramount Plus platform. That being said, let's jump over to our fair value calculator to see what the company could be worth. Okay, so you can see on our discounted cash flow calculator, by the way, this is the beta version of our DCF calculator. Well, we can see we get a fair value of about $20 per share. The way we got those numbers is we had to extend out our projections, extend them out 10 years. Now, we can see that we have some analyst estimates. The green numbers are analyst estimates down there for the first 3 years. Everything after that, the following 7 years, are estimates that the computer takes by, basically it says, okay, what were historical numbers and what if we were to grow those numbers out? When I did these projections, they seem reasonable coming off historical numbers and coming off of what we know the company's going to be doing. They're spending a lot of money in the near term to try to increase their cash flow down the road. That's the very idea of discounted cash flow. If they can earn all of this cash flow in coming years, what is that worth today? It looks like the stock would be worth about $20 per share. They're trading a bit below that right now. But I think that this is a very important point, and that is that we need to add some adjustment for risk here. This is where I think a margin of safety can be very useful. You can see that we have a square down here for margin of safety. And based on my research, I think it makes sense to make this margin of safety 25%. And when we do, well, ideally, we want to now buy the stock below $15 per share. Again, it's right around $18 per share. So we'd like to see this stock fall just a bit more. The reason I went with a higher margin of safety, for me, 25% is a decent margin of safety. The reason I went with that higher margin of safety is because there is a decent amount of risk here. One of the reasons I walked through the entire history of the company is because I thought it was unusual how many moves that they've made to end up in a spot where the company's worth $12 billion. But the advantage that they have is all of those moves also gave them all the amazing content that they have today. I like the trajectory that the company's on, but they have to execute it. They have to be able to bring people into the Paramount network of, direct to consumer products and then get them to stay. They have the content. Can they get them over? That's the real question when they're competing against companies like Disney Plus or Warner Brothers Discovery or Netflix. There's a decent amount of competition here, but these guys have some of the best content out there. Now, for me on a personal basis, I don't plan on adding Paramount Plus to my investment portfolio. I already own Disney and I already own Warner Brothers Discovery. I think that there's more risk in this company at the current price. Now, if it drops below 15, maybe it could get more interesting at that point. But at the current price, I hesitate just because I want to see what the company does over the next couple of years and what revenue they actually generating per user, and can they keep people on their platform? So if you'd like to sign up to get access to this website so you can try to value your own stocks, and if you find any good ideas, please come over to our private investing community. That's part of the website. Come over to our private investing community, share any good ideas with us. You can see the ideas that we're bouncing around over there. If you'd like to, I'll leave a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.